Hey everyone, it's Brandon from the Young Investors Podcast. Myself and Hamish are excited to bring you your weekly rundown of the latest business and investing news from around the world. A quick reminder before we get started that any advice provided by myself is general and does not consider your financial situation, needs, or objectives, so consider whether it's right for you. Brandon Kolk is authorised to provide general financial product advice in Australia and is authorised representative 1305795 of Guideway Financial Services Proprietary Limited, AFSL 420367. Please see the description box for my financial services guide. Past performance is not a reliable indicator of future investment returns, but with that said, let's get into another episode of the Young Investors Podcast.
All right, welcome back, everybody. And on today's episode of Where's Brandon? Because he's got a new background once again.
I do.
Brandon,
this time the background's legit.
Actually, true. Last time you had the snowy. What did you have? You had the snowy mountains of Perth, I think, last time.
Yeah, exactly.
No, so you're slacking out. Come on, you got to spend at least 1 week in Melbourne. Come on, you got to come home, all right?
I am working, believe it or not, while I'm on holiday. I'll show people the view from this villa. Like, look at that. That's a private pool. That's a private pool just for this villa. It's pretty awesome. Tash, I'm in Vietnam, and Tash had booked this trip last August.
Wow.
And she just saw like unbelievable Jetstar flight deals, and she didn't even consult me. She just booked it and said, hey, by the way, keep this time free next year. And so now I'm here. But yeah, I have been doing a lot of traveling lately. But it's all influenced by Tash, I tell you. I'm actually not huge. I'm not a huge traveler myself. Like if I was just single by myself, I don't think I'd actually go very many places. But no, Tash, she loves to travel. So, yep, here I am in Vietnam, enjoying the lovely weather. What's the temperature? It's like 10 degrees or something in Melbourne today.
Yeah, let's not talk about it. But it is kind of funny. I do say that kind of as a joke because I'm about to go to Croatia for two couple of weeks and completely go off the grid. So,
when is that?
Yeah.
Soon.
That's 2 weeks. 2 weeks I leave. So
2 weeks.
Yeah, I'll be.
So
I'll
we should
be
kind of
off
tell
the grid.
people. We should tell people, I guess, that while you're there, we're not going to be doing podcasting because you want to. You deserve like a good break, and you're not going over with any of your recording equipment. Is that right? You're kind of just going over.
Yeah.
I'm
not
taking holiday.
Yeah, I'm not taking anything over. So. I'm disconnecting.
Yep.
I'm checking out for a couple of weeks, but we'll be back afterwards. So apologies for.
So
for
are you going to get videos done beforehand, or are you just going to take a bit of a break on YouTube?
Yeah, I think I'll probably have one video queued up. I've only been posting. Okay. I've really only been posting every 10 or so days anyway, so I probably only need one. I think kind of one video I'll queue up, but.
Yeah,
but yeah, there'll be a little bit of less content over the next little while.
Okay, yeah, interesting. Well, we better make these podcasts count, Hamish. We do have a fair bit to talk about today, right? We've got there's a fair bit going on in the world of US politics, I'd say, this week or the last couple of weeks. We've got Elon Musk. And he's potentially stepping away from DOGE, which is quite interesting. And we've got the Trump tariffs. Some of the Trump tariffs have been reportedly blocked by the courts, so I'm going to be talking about that. We might start with that story. And then, Hamish, you got some earnings, don't you?
Yes, we've got... there's been a lot of earnings. It's where it's earnings season, of course. But I picked out a couple of ones that I thought were interesting. We have Nvidia, which reported their Q1 2026 earnings. Again, they're always in the future. And Airbnb. I thought we'd take a look at an Airbnb as well. Yeah, so with that said, today's episode is brought to you by Seeking Alpha, your one-stop shop for stock analysis, market data, and news. Access expert analysis and news for thousands of stocks. View buy, hold, and sell ratings from members, Wall Street analysts, and Seeking Alpha's own algorithm. Screen for stocks using a variety of fundamental and technical analysis metrics. Access 10 years of financial data and company filings. And manage your portfolio by tracking your investments with price alerts so you never miss a buying opportunity again. Click the link in the episode description or head directly to seekingalpha.me/young investors to try Seeking Alpha free for 7 days. Let's start with this tariff courts story because this is something that has been kind of brewing, I think, in the background for a while, and now we're finally getting some some progression and some updates around the legality of what Trump has been enforcing through executive orders.
We've spoken about this quite a few times because we've always held the opinion, because the president can do some things related to tariffs, but it's only in certain situations that they have the executive authority to actually pull the trigger and do these different things. A lot of more broad trade negotiations or tariffs have to go through Congress.
Yeah.
So we've always been saying over the past few months that some of this might actually get pulled up in the courts, because President Trump might find he actually doesn't have the power to do some of what he's doing. And it seems like that is turning out to be the case, which is a good call from you, Hamish, because I think you brought that up a few weeks ago, a few podcasts back. So the latest news is US President Donald Trump has been allowed to keep collecting tariffs while the White House appeals against a ruling that dealt a major blow to a key part of his economic policies. So a day earlier, the Court of International Trade ruled that an emergency law invoked by Trump did not give the president unilateral authority to impose tariffs on nearly every one of the world's countries. The New York-based court said the US Constitution gave Congress exclusive powers to regulate commerce with other nations, and that this was not superseded by the president's remit to safeguard the economy. Small businesses and a group of states had challenged the tariffs that have shaken up the world economic order. So I thought I'd start off. I think that's quite interesting, actually. The US is appealing, or the president's appealing, but we don't quite have a solution yet. But I thought I'd start by talking about who brought the case against the tariffs. Yep. So the ruling was based on two separate cases. The nonpartisan Liberty Justice Center brought one case on behalf of several small businesses that import goods from countries that were targeted by the duties, while a coalition of US state governments also challenged the import taxes. So the two cases marked the first major legal challenges to Trump's so-called Liberation Day tariffs, and went to the Court of International Trade, a part of the federal court system with specific authority over trade. Then a three-judge panel ruled that the International Emergency Economic Powers Act, the IEEPA, a 1977 law that Trump cited to justify the tariffs, did not give him the power to impose the sweeping import tariffs.
Yeah.
The court also blocked a separate set of levies the Trump administration imposed on China, Mexico, and Canada in response to what the administration said was the unacceptable flow of drugs and illegal immigrants into the US. However, the court was not asked to address tariffs imposed on some specific goods like steel, cars, steel, and aluminium, which fall under a different law.
Yeah.
So this is pretty much exactly what we were questioning, Hamish. We were exactly what we were saying. We were saying, does he actually have the power to do this? And the answer seems to be probably not. At least it's getting challenged in the courts. So what's your take?
Yeah, so, I mean, obviously, all of the court systems they're all kind of like ranked, right? So this is kind of the first stage. This is the first court that said, no, this isn't allowed. Then there'll be higher courts that there's the appeals court, and eventually it can potentially go to the Supreme Court, which is where it'll end up. But yeah, this is the funny thing I was just going to say about the three-judge panel that ruled unanimously. All three of them ruled that these tariffs he couldn't do them. One of those judges was appointed by and selected by Trump, and even his judge said no. So I think that gives you an idea of at least so far in the US kind of court system how they're interpreting the use of emergency laws through executive order. And very clearly they support the idea that if you're going to be doing these very broad tariffs, these broad trade changes, that power lies with Congress. You can't, as a president, just sign things into law. You have to let all of the senators and all the Congress people vote on it. So that's what's happened so far.
Yeah, exactly right. And then to kind of go on from what you're saying about the levels of court. There's a section of this article which speaks about what happens next. It says the hearing in the case is on the 5th of June. So probably around the time this podcast goes out. Depending on what happens, the case could eventually go to the Supreme Court, as you were saying, the highest court in the US. But even if Trump lost there, it would not necessarily spell the end of his tariff plans. For one thing, the ruling noted that the president does have the power to impose tariffs of up to 15% for 150 days to address concerns about the balance of trade, which the White House had argued were an emergency. If the administration chose to go down that route, those new tariffs could go into effect within days, according to analysts at Goldman Sachs. Trump could also turn to other more established laws that he used in his first term to justify the tariffs, which focus on issues such as national security and unfair trade policies. Those require investigations and periods of public comment before the tariffs go into effect, though. Goldman Sachs said Trump might also turn to an untested part of a 1930 trade law that allows the president to impose tariffs of up to 50% on imports from countries that discriminate against the US. Yep. So it's all just like how it gets spun, isn't it? Like we knew from the start that, you know, the whole fentanyl national emergency, yeah, it's a bad problem, but it was very clear, at least in my mind, that the fentanyl emergency had been painted as such so that Trump could pass these tariffs. Like he had to link it to something that was emergency worthy so that he could have a case as to why he has the authority to impose these tariffs. So, it'll be interesting to see kind of how it plays out, I guess.
Yeah, and I think the other thing
there's a lot of little ways he can turn.
Yeah, and I think the other thing to remember is all of these like different ways that Trump could maybe use existing laws to try and, you know, do 15% on tariffs here and that sort of thing. All of this is still, if Trump just wants to do it through executive order. Ultimately, if he wants to just pass these sweeping Liberation Day tariffs, he could just try and legislate it through Congress. And the Republicans do have a majority in both the House of Reps and the Senate. And so theoretically, if Republicans are on board with these tariffs, then he can just pass them as law, and then there wouldn't be there's no debate. This is all about whether Trump can make these tariffs law without actually going through the normal law writing process, which is through Congress. And so we might also see something like that. We might see that some element of the tariff or trade policy is actually legislated through Congress, whether it's its own bill or as a part of one of these tax or spending bills that's been working through at the moment. So, but yeah, ultimately it does look like it will probably go to the Supreme Court. Which will be interesting to see. But all of these, it just takes so long, all of this stuff to kind of play out. And I guess there is a little bit of time because most of the tariffs are still paused. Remember, there was this kind of 90-day pause. And so there's still quite a bit of time, not that much time, but there's still a bit of time before a lot of those tariffs actually go into effect because they are paused. And so there is a little bit of time for some of these things to work through. But the tariff story certainly isn't over. It's just on pause.
Yeah, we'll see what happens with it. It will be interesting if this gets blocked and kind of what happens next. But seems like we won't have to wait too long. As I said, the next hearing in the case is on the 5th of June, so we'll see what happens, I guess.
Yeah.
All right, over to you, Hamish. Tell me about Nvidia. Very interesting company at the moment, going from strength to strength. What's going on?
Yeah, Nvidia's been on quite the run recently in the last couple of years. They just this week they reported their Q1 2026 earnings, which I mean that already just gets me annoyed. Like, how can you have a company that reports 3 quarters in 2025, but then the last quarter is reported in 2026, and so it's a 2026 financial year. It's insane. Anyway,
so dumb. Why is this not standardized? Why is it not standardized? It's so annoying.
Yeah, they definitely could do that. I don't know.
I mean, call spade a spade. January, February, March, Q1.
Yeah.
You know?
I mean, that's what
Not hard.
I'm pretty sure that's what Australians companies do. I don't think there's any companies in Australia that report outside of the standard financial year, which ends in the middle of the year.
Yeah, the problem with Australian companies is some of them have, because our financial year ends in the middle of the year, Q4 can be the 3 months leading up to July, I guess.
Yeah, true. Yeah. Who knows?
Instead,
Anyway.
I just like it. Just like it's so easy. Like we've got a calendar for a read. Just use the flipping calendar. January, February, March, Q1.
Yeah, I guess. Yeah.
April, May, June, Q2.
Nah, we're in financial year 2026. We're in the future, and to be fair, Nvidia is
Apparently so.
essentially in the future, and they've continued to have a pretty good quarter in Q1. They reported revenue of $44.1 billion, which was up 12% quarter over quarter and 69% year over year, plus 69% year over year.
Wow.
Which is honestly still astonishing, nearly 100% growth again. Most of which, of course, came from their data center revenue segment, which reported $39.1 billion of revenue, up 10% quarter over quarter and up 73% year over year. Their other segments, they had a gaming and AI PC segment, which I thought was kind of funny. They renamed the segment from gaming and PC to gaming and AI PC. But anyway, Nvidia, like it's a .com, like all the companies that just add .com at the end of their name during the year 2000. Nothing to see there.
Yep.
They reported $3.8 billion in revenue, which was up 42% year over year. So even their gaming and PC chips have been exploding in popularity on the back of a number of recent releases. And then they also have their professional visualization, automotive, and robotics segments, which I just lumped together, which produced a total combined of $1.1 billion of revenue. So
It's pretty clear to see where the money's coming in from.
Exactly, yeah. So yeah, the lion's share, 90+% of their revenue is obviously coming from these from the data center chips. On the profitability side is a little bit more interesting. They had net income of $18.8 billion, which was still up 26% year over year, but quarter over quarter was down 15%. So even though revenues were up 12% quarter over quarter, their profits were actually down 15%. And the decrease in profits, or I should say the fact that costs rose more than revenue during the latest quarter, is largely the result of an impact that they felt during April. So the biggest impact was, and I think we spoke about this at the time, which was in relation to changes in export restrictions to China and around some of their chips. So on the 9th of April, Nvidia was informed by the US government that a license is required for exports of its H20 products to the Chinese market, or into China's market. And that was an enormous impact to their sales and to their business. So up until the 9th of April, during the quarter, they sold $4.6 billion worth of H20 chips. And then after the 9th of April, they were unable to sell the remaining $2.5 billion in orders that they had. So the sales were just kind of cut off completely. And so this is not a small business for them, selling these H20 chips to China, $4.6 billion up until April 9th. And then what they thought was going to be another $2.5 billion coming in from orders that had already been confirmed, purchase kind of obligations, was just completely cut still. And so that's why their profitability was impacted a little bit during the quarter. They incurred a $4.5 billion charge on their income statement that was related to having excess inventory that they had to write down in value because they couldn't sell it, and also from purchase obligations where they expected to be shipping these products to China, and they were prevented from doing so and fulfilling those purchase obligations. And so that's why they kind of took a pretty significant hit to profitability during the quarter.
Interesting. Yeah, crazy. So what happens, maybe you're about to talk about it, but what happens now going forward? Is there any clarity around it?
Yeah, well, that's the thing, right? Because I think clearly China and sales to China has been, and you would maybe think going forward is a big part of where their continued growth could come from. It's clearly a big part of their business, even though there are a lot of restrictions on the types of chips that they could or they have been able to sell there in the past. They've been able to work around it by, selling these older, H20 chips that are not as good. But that China has always been quite a big part of their business. And so, there are huge question marks over their ability to sell into China going forward. The company admitted on Wednesday that it has, quote, limited options at the moment for selling chips there. So they didn't really provide any clarity on that. There's maybe the hope that some of these restrictions change in the future, but as it is right now, they're unable to essentially sell to China, which is obviously not great for their business. And you can really see it, I think, the impact in their guidance for revenues in the next quarter. So they're expecting in the next quarter to have revenue of $45 billion, which is basically the same amount of revenue as the quarter that they just reported. And the reason why they're expecting no growth quarter over quarter is because what they previously thought they would get from selling H20 chips in the next quarter was about $8 billion in revenue. So they're missing out on about $8 billion in revenue in the next quarter, simply because of these restrictions. And so
that's unbelievable.
One way that you can kind of look at it is this H20 chip was going to essentially be all of their growth in the next quarter. And without that chip, they will not grow revenue quarter over quarter. And so it is meaningful. Obviously, most of their business is still, within North America and some of the other regions. But it's meaningful. And so there are obviously, there's big question marks about whether they'll be able to find other ways to sell to China in the future.
Yeah, interesting. I wonder if can they just sell the H20 chips into America, or maybe there's not enough demand for it? I don't know.
Well, so if I'm not mistaken, the whole H20 chip was essentially just created as a way around export controls. It's a much worse chip than what they're selling to American companies. They simply created this kind of throttled 2-year-old chip that was that they were allowed to sell into China. And so basically all of the demand for this chip was just China, because everyone else is just willing to buy the best chip that Nvidia has to sell. And so we don't really know what's going to happen going forward. Maybe they'll be able to design a new chip that's that they can sell to China, and the US will change their kind of regulations around this. But who knows? With all of this said, I should note that their $45 billion in revenue that they're projecting next quarter is still a 50% year-over-year growth rate for revenue.
So good.
So when I say China's the restrictions are impacting their business, they're still growing at an astounding clip. And so their business is obviously booming. There's enormous demand for their chips. There's been some wrinkles here and there with changes to trade restrictions, but they've continued to dominate in this AI chip race.
Yeah, sorry, I got confused with that. You're right, the H20 being designed specifically for China. I thought that was their flagship chip, but it's the H100 chip that is the flagship chip being sold in America. My mind just got that wrong.
Yeah.
Never mind. So that makes sense. So yeah, they don't really have anywhere to turn around because the US businesses want the better one.
Yeah. Which is exactly,
okay.
in part why the impact to their profits was so significant during the quarter, because all of a sudden there's nowhere to sell them. And so, Chinese companies who are willing to pay much more for those chips because they're the only ones they're able to buy, suddenly Nvidia has to turn around and find someone to sell those chips to in the US. And so the value of those chips obviously declines significantly, at least, on paper. For the inventory that they already had.
Get your outdated chips here.
Yeah. Just cross out 20 and write 100 and
yeah,
someone will buy them.
yeah, exactly. Put them on eBay. See if some schmuck will get in.
Yeah.
Oh dear. Well, that's very interesting, Hamish. That is very interesting. But yeah, as you say, still very amazing performance overall.
Yes.
Take a step back.
Yeah, exactly.
Yeah. Interesting. All right, should I talk about this next story? Elon Musk. What is he doing now?
What's he doing this week?
He's practically unemployed now because he's stepping down from Doge.
Yeah, and he's about to get kicked out of Tesla. And
yeah, he's copping it from all angles. Kidding. Poor guy. No. The story this week is that Elon Musk is going to be stepping down from the Department of Government Efficiency. It was in February that Donald Trump appointed Elon Musk as the head of the department, and it hasn't taken all that long before he's out of there. Although President Donald Trump, it says here, lauded billionaire Elon Musk on Friday as the Tesla CEO wrapped up his time in government service after 4 turbulent months leading to the so-called Department of Government Efficiency. He says, quote, this will be his last day, but not really, because he will always be with us, helping all the way, Trump wrote on Truth Social on Thursday, adding, Elon is terrific. It's a very Trump kind of post, isn't it?
Yeah.
Still, Musk said Sunday that while he has been a strong Trump ally, he doesn't always support the administration's policies. Quote, I'm a little stuck in a bind, he said on CBS Sunday morning. Quote, where I'm like, well, I don't want to speak up against the administration, but I also don't want to take responsibility for everything the administration is doing. Which is kind of, he's kind of copped it.
It's such a problem with politics, right? Like I think, I think Musk could have done, a lot here, but it just puts you in such an awkward position. It puts him in such an awkward position because, he obviously, if he aligns himself with Trump, and obviously Trump's giving him the job essentially, he would then feel, awkward, I guess voicing his own opinion if it goes against the administration. So this is the problem with politics, is you end up with a bunch of people who just say things that they don't believe because they have to stick on their party or their administration's, line. And then you just end up with a bunch of people just saying things that they don't believe, which is really odd to watch.
Doge cut tens of thousands of federal jobs within the first few months of Trump's tenure. Musk has defended his government record, but acknowledged in the CBS interview that, quote, Doge became the whipping boy for everything. So if there was some cut, real or imagined, everyone would blame Doge. And that's definitely been, the media's had a field day, particularly those that are anti-Trump and have now become anti-Elon. It's been very easy to just point the finger for anything bad. Oh, it's because of Doge. It's because of Elon. It's because of Trump. That's definitely been a trend that I've personally noticed. It also says here, this is quite what I found quite interesting, that Elon Musk, he's also dismayed by the GOP's multi-trillion dollar tax and spending package that Congress is currently debating. The legislation, this is why he's so annoyed by it, the legislation is projected to add trillions of dollars to the US debt. And when asked about it, Elon said, quote, I was disappointed to see the massive spending bill, frankly. He said, adding that it undermines the work that the Doge team is doing, which is true. It is very true.
It's not very government efficient.
No, exactly. And I just checked on the website just before. Doge currently, it's been to like, sure, Elon originally said $2 trillion cut out of the deficit, and he's not going to hit that. Doge currently has 175 billion in savings listed, which sounds like a small number, but really I think it's still a good chunk of change to have back off the deficit. But obviously this new spending bill is just going to make all of his effort just completely irrelevant, just like that.
Yeah.
Like with the snap of your fingers. Yeah, it says here, if enacted as currently drafted, the House's One Big Beautiful Bill Act, wow, the naming convention for bills has really gone downhill. It would make permanent Trump's 2017 tax cuts while adding new tax breaks for tip income, overtime pay, and older Americans, among other provisions. An earlier version of the House package could raise the deficit by an estimated $3.8 trillion over the next decade, according to the Congressional Budget Office. However, the agency hasn't released an updated score to reflect the bill's last-minute changes. Other cost estimates for the House-passed reconciliation bill have ranged between $2 to $3 trillion over 10 years.
Yeah, it's not great.
No.
Mostly because it's in the exact opposite direction that any spending bill, any budget should be heading. And yeah, I mean, it does.
You can just imagine what Elon thought when, he's been, because I do, say what you want about Elon Musk. I think he was genuinely committed to this idea of Doge. And I do think, again, regardless of what you think of him, I think he was genuinely working hard to make it work, to cut out the money out of the deficit. And to see the president just kind of turn around and the Republicans turn around and pass this massive spending bill, as just a slap in the face, really. I can understand why he would have just been like, what the heck am I doing here then,
Yeah. Yeah, it does kind of just reinforce this idea that that there's just the deficit and the debt's just going to continue to get worse. there's no mechanism for it to come back. I don't know. It's kind of crazy.
Yeah, it's pretty wild, isn't it? Yeah, it just I just don't know how they get it back under control, or if anyone even wants to.
No, and the problem is inevitably there will be, as unfortunate as it is, inevitably there's going to be some kind of economic crisis or a war or something that actually needs an excessive amount of spending. We're going to see that over the next 10 years for sure, maybe sooner than that. So when that happens, it's going to get ratcheted up as it did after COVID and after the global financial crisis. And so what happens at that point? Up until now, it's like we've been able to handle two very large increases in the debt because of two, distinct crises. But what if there was, some kind of very excessive global conflict that needed 5 years worth of a lot of spending? Where does that put the US then? And I don't think anybody knows the answer to that question, but it's probably not good. And so,
Hamish, we're gonna have to buy some Bitcoin.
Yeah, honestly, Bitcoin's not looking too bad at the moment. All of a sudden.
All of a sudden. Yeah. That's funny, isn't it?
Yeah. But
yeah, there you go. That's the story. That's the latest in Elon Musk stepping down from the Doge. But to be clear, the Department of Government Efficiency, at least for now, for the foreseeable future, will still continue. It's not like the department's shutting down. It's just that Elon Musk is stepping down. But I imagine he'll still be helpful wherever he can be. But he still believes in the cause and thinks it's necessary, and the department will still keep going. But he's just going to, I don't know, I kind of feel like it might have been a little bit of the backlash from Tesla, and Tesla being like, come on, Elon, what are you doing, mate?
Yeah.
You've got other companies to run.
Oh, I mean, for sure. Yeah, definitely. I think it would be naive to say that there wasn't an element of, Elon getting involved in the administration that was supposed to be good for Tesla, and him probably leaving is probably, I would say, probably in part to try and help Tesla as well. But
yeah.
But yeah, it's been quite
I'd agree
quite a rocky road for Elon and Tesla.
Dude, people have been so like I know, like you can be frustrated at Elon or think whatever you want of Elon, but people have been like lighting Tesla showrooms on fire and like spraying bullets at Tesla showrooms and like vandalizing people's Teslas just because of what Elon's doing in Doge. Like, I just find that crazy.
Yeah.
I find that so crazy. So, I mean, fair enough. If it's getting that bad, then maybe he does just have to step down to focus on Tesla. And because, yeah, people, they really were like vandalizing stuff. So
yeah,
it's not good for the company or for Tesla owners if that keeps happening. Imagine like, oh, I'm thinking between the BMW and the Tesla. Oh, maybe I'll go the BMW because then there's a lesser chance my car will be vandalized. You know?
Yeah, that's crazy. It's not something you should have to think about.
Yeah.
Yeah, insane. Yeah, I don't know. There's a lot of crazy people out there.
There is. Anyway,
yeah,
it's what it is.
Yeah. Well,
right,
speaking of another entity that has a spending problem, Airbnb reported their earnings. No, it's their earnings actually weren't too bad, but I saw them there, and I thought we'd take a look. So I hadn't really looked at Airbnb. I don't look at Airbnb regularly for their earnings results, but I wanted to see how they're doing.
I don't think I've ever looked into Airbnb, to be honest. So
no.
I'll be interested to see kind of where they're at.
Yeah, and they've been public not that long. They IPO'd in 2020, so they're a relatively young company. Young to the public markets, but also just a young company in general. They haven't been around for very long, even beyond that. True. So, I thought I'd take a look at how they're doing. Airbnb posted higher revenue for the first quarter, but guided for a moderation in bookings growth in the second quarter as economic uncertainty weighs on its US business. And so I pulled up their press release on their website. Normally, like a press release for a quarterly filing is just like a HTML website, right? It's just like text. Airbnb's quarterly press release is probably the prettiest, most well put together thing I've ever seen. Like it
reflects their brand.
Yeah, exactly. It's like the most I don't know how much money they spent on that, but they should probably spend a little bit less time and money on the presentation and more on the actual business. But which I always do find it funny. Whenever there's a company that has like a really, really impressive like investor relations like page, usually the business isn't doing that well.
Short.
Like usually that's the case. Not always, but I thought that
it's definitely the case.
Yeah.
If you have to try and convince investors with pretty pictures, that's why. Have you ever been to? Yeah, you definitely have. But for those at home, if you haven't been to this website, type in Berkshire Hathaway into Google and go to their homepage. And then you'll really see, because Berkshire Hathaway's website has just text. It's just nothing. It's just a couple of it looks like it was designed in the 90s. Hasn't been updated in 15 years. It's just got a couple of different links on the front page. No fancy pictures or anything.
Yeah.
But when your business is that solid, you don't need that kind of stuff.
Yeah, that's all you need. That's all you need. No, I say that it's a bit of a joke. Airbnb's business actually is doing reasonably well. So their gross booking value came in at $24.5 billion in the quarter. So that's like the total value of all of the bookings, obviously. So $25 billion, which was a 7% increase year over year. So in terms of the total amount of bookings that they're recording, that's continued to grow at not a huge rate, but a reasonable rate. And then, of course, from that, Airbnb themselves collect a much smaller percentage as actual revenue from their fees. And so their revenues were actually $2.3 billion, which was a 6% increase year over year. And then, of course, from their fees, then they spend an outrageous amount of money on marketing and making this press release look pretty. And so at the end of the day, how much profit do they have? During the quarter, they produced $154 million in profit. which was actually down 42% year over year. So on a top line basis, they're doing pretty well. Bookings are growing. Their revenues, like the fees they're collecting, have been growing. Profits were down 40%.
So they take about 10% of the gross booking value as a fee.
Yes, yeah,
they must do.
Yeah, which is pretty crazy.
Interesting.
But what's even more insane is they do 25 billion in bookings and they collect 154 million in profit.
Yeah,
which is not much, but I'll get to a couple of the reasons why that's the case in a second. But in terms of the revenue growth, revenue growth was driven by they said a solid growth in the nights stayed. So one of the measurements they use is kind of the total nights booked. So that number came in at 143.1 million nights, which was an 8% increase year over year. So it gives you an idea of just the scale of Airbnb's business. That's quite a few bookings, and that was slightly offset by a slight decline in the average daily rate. So the average amount people were paying per day to stay at Airbnbs. So that's obviously good news for their business. The underlying growth you would expect or would want that to be driven by an increase in the nights being booked, because that's kind of their core demand, I guess you would say, over time.
Yep, makes sense.
They spoke about their North American business. Demand continued to grow in North America despite macroeconomic uncertainty, with most of US stays booked by domestic travelers, the company said. Travel from Canada to the US did slow towards the end of the quarter, likely as a result of some of these trade and international kind of conflicts between the two countries.
Yeah. It seems like people are getting a little bit more hesitant to travel to America. I've seen just around on social media a lot more people getting turned back at the border. That people's phones have been seized and like scrolling through people's messages to see if they've said anything that's like anti-Trump, anti the Trump administration, and people have been turned away, which is kind of crazy. So I can understand that there's land of the free, not so much. Interesting that people are kind of being turned away. So much for free speech.
There's a huge irony in that. It's hilarious that
there is.
I've seen a few of those stories. I don't know how widespread that is, but obviously it's probably not that widespread of people getting turned around like that. But it
starts to leak into especially once it threads through social media. People are like, oh, should we go to, if you're a Mexican family or a Canadian family, oh, should we holiday in the US this summer? Maybe we can go elsewhere.
Yeah, give it 4 years.
Yeah, exactly.
We'll circle back.
And,
so they actually saw some a noticeable decrease in travel coming from Canada. They also right at the top of their earnings release, they make sure that they mention that they produced $1.8 billion in free cash flow. Wow. So that they produced 154 million in profit, but 1.8
they have managed to turn we're about to say the same thing. They've managed to turn 154 million in net income into 1.8 billion of free cash flow.
Yeah. So this company, they're swimming in cash. What's the problem? They make sure they let you know right at the top of the press release, which if you're, if you have half a brain on, you might wonder immediately, how the hell do they have, how are they so different? What's going on there? And there's really two things that make their free cash flow look so abnormally good when it's not really. The first is the company in that 1.8 billion of free cash flow is about $1.1 billion of what's called unearned fees, or sometimes it's called deferred revenue, which is where they've collected cash up front for bookings that they haven't provided yet, essentially.
Yep.
Which, in other words, they have 1.1 billion in cash up front, but they're going to have to pay a large amount of that cash to the people who own the houses that ultimately host people. But don't look at that.
We don't need to talk about that, Hamish. We don't need to talk about it.
Yeah, we don't have to talk about
All
that.
I'm hearing is $1.1 billion, Hamish.
Yeah, exactly.
Straight to the bottom line, dude.
So that's the first reason. The second reason is the stock-based compensation. So they also pay a large amount of their compensation to executives in stock, which is not cash. And so they actually paid during the quarter $358 million to executives in the form of stock.
Right.
Which, of course, is not a cash expense, but it is a real cost to the investor because it means they have to create a new share and kind of cut the pizza into more shares to give those shares to the executives. And so your share becomes diluted. And so
358 million in stock.
Yeah. For a company that produced 154 million in profit. So like the executives are getting way more out of this company quarter, and that's just stock, right? They obviously got paid in cash as well. So the executives and the staff, I guess maybe as well to some extent, are earning significantly more than what's being left for the shareholders, I guess you would say,
for the owners.
Which maybe you could say that they. That's a good thing that they're investing in their staff and that they have a productive, workforce and that drives the business long term.
358 million.
But they're definitely one of the more egregious stock paying companies.
Yeah.
That
blows my mind.
So it is quite funny if you look through their press release. If you spend a bit of time looking through quarterly and annual reports, you immediately get the sense of which companies are marketing and which ones are just, talking to the shareholders. And it's not to dig on Airbnb and say it's going to go, out of business or anything, but it's certainly one of those companies that they are very aware of the fact that if they talk nicely and they present things nicely, that the stock will hopefully do better. Or although I do say that, and the stock's actually down 7% since IPO, so it hasn't really worked. Although they're certainly trying, but
interesting.
But there you go.
When did it IPO? Did you say
in 2020? So the stock's pretty much done. Bounced around a little bit during 2020, but since then it's been pretty much just flat. Nothing really.
It has been flat. That's been really interesting.
Hasn't been overly. There's really nothing too exciting about the stock price. It's just bounced around.
That's because the investors at the end of the year are scratching their heads, being like, "Where's all this money go?" And the executives are just like, "They're off on holiday."
I mean, you're not exactly wrong.
Wait, I'm sure. Did this business not make like a heap of cash this year?
Yeah. Wait, where
the heck did it go?
Where's the 1.8 billion?
Who's got it? Where?
It evaporated. Oh, look at that.
Would you look at that?
Yeah,
it's gone.
Yeah. So yeah.
Well, there you go. Yeah, nice. Done, right?
Yeah. Yep, that's it.
Unless you have anything more to talk about with Airbnb, but I don't have too much to add. But that is a very interesting story.
No, the only other thing I saw was they're starting to add all these other kinds of services. Like you can book a in-house chef now as like a service, and so they're trying to add like all these little experiences.
It's who
knows how they'll do, but they're giving that a crack to kind of expand their slate of
well, they kind of all try and do that, don't they? It's like all the hotel sites eventually want to be like hotels and flights.
Yeah.
And then it's like, hotels and flights and experiences. They kind of try and just keep expanding and doing more and more of the holiday for you, I guess.
Did you see, sorry, this just reminded me. Did you see did you see Uber doing a presentation and essentially like announce that they invented the bus? Did you see that presentation? Where they do this presentation?
I didn't see the presentation, but you did send me a message about that.
Uber did some presentation. I don't know what it was, some investor presentation. And they're talking about this new service that they've got where they've basically got like set points where you can get picked up. And they're just describing a bus.
Yeah. It's like mass transit. You walk to a set spot. And then the Uber comes and picks you and a bunch of people up at the set spot. And we have set routes that drop you off at set spots. Genius.
Yeah, they got a big round of applause. Yeah.
Ah.
Yeah.
We're going to call this the bus.
Yeah.
That's actually so
Yeah,
dumb.
no,
That's
that
so
was quite funny.
There's a great YouTube video, I think, that I've watched. I can't remember who did it, of like tech bros inventing things that already exist.
Yeah, there's always
there's
a bunch of them. Yeah, just rebranding something that has already existed forever.
Yeah.
But if you say it in like a cool way, Apple's notorious for doing stuff like that. They always come out and act like they've created something new, but it's like it's a technology that's been out for like a decade.
Yeah, so true. So true. Yeah, that was quite funny. All right, dude. I'm going to get back to lying in the sun. Sorry, I got a very busy schedule today.
Damn. Yeah, I'm going to go back to being in cold Melbourne weather. So,
yeah. Is it actually like 10 degrees? I think I looked it up before.
Something like that. Yeah, I don't know.
Yeah.
I haven't been
outside.
outside.
It's 30 degrees and clear skies here. It is very humid though, so it's not particularly comfortable sitting outside because you just sweat like crazy. Man, I just gotta show everybody.
Maybe I should fly over. Let me check the flights.
Yeah, well, we're going to come to... we should probably talk about this off air, but are we keen for the Vietnam trip next year?
Oh yeah, true. Yeah, we might be doing that.
Yeah.
Right? Yeah.
Look how nice that is. It's beautiful. All right. Well,
Very
we're going to
jealous.
sign off. Thanks very much, everybody, for tuning in. We won't subject you to our day-to-day waffling, but we'll see you guys hopefully next week for some more podcasting action. Bye-bye.
See you guys.